Hi there, traders. This is Brad Gilbert with the Daily Market Insight for, Thursday the 19th. Losing track of the days. Now, what are we seeing? Awesome carnage here on the equity markets. As I was saying, the whole equity move and trend is not over. We've had a bit of a relief rally after the US CPI numbers, but you've got to be on alert, right? So I think Target's earnings, maybe even Walmart, Target share value, market value dropped by a quarter. That's epic, right? So that's really put a negative tone on the equity markets outside of, the Fed interest rate cycle, right? This is an extra thing on top. So it compounds the moves on equities. But just having a look across the board here, and we're seeing a slight little correction of some of these moves on some of the currencies from yesterday. So is it a risk on, risk off profile? Well, at the moment, the US equity futures are down, okay, even further, which you would think would be a risk off. You'd see Euro, Sterling, Aussie, Kiwi 4, but they aren't doing that. So there's a bit of discombobulation here. And this is what I want to focus on, because there's a couple of things happening that you can sort of see. Now, the dollar sort of bounced back a bit. You're seeing Euro dip, Sterling CPI missed the mark. Aussie and Kiwi just following the big brothers, Sterling and Euro. The Canadian CPI a little bit better than expected. You'd think it would go down, but oil's fallen about $7. So that's really screwed up the move on dollar CAD. You got to understand, dollar CAD is a very hard pair, more so than most other currencies. It's got so many variables: oil, the US data, Canadian data, and a few other components pulling it and twisting it. So it's never a clean trade unless everything's lined up on that sucker. And unfortunately for a lot of traders, yesterday, CAD CPI, at the time, oil was rallying, dollar CAD was falling, it looked great. Then you've got this move in the equity markets, you've got the oil falling by $7 and the trade's screwed up. So just got to understand that, but that's actually not what I'm thinking of. Check out the move here on the yen and the Swiss. It's like the safe haven trades coming back into play. And what we're talking about, they're buying yen, they're buying Swiss. You'd think like this is where things get a little bit like weird, in the sense that you can see discombobulation, as I was just showing you on the other page. Euro lower, dollar Swiss should be higher, but it's not. Right, it's being overridden. There's a big clean out here. Dollar yen also starting to point to the downside. This could be the start of a safe haven trade. And why do I think that? Well, if I just bring you back across, actually, let me go over to the global page here. The volatility index, is that on this one? No, it's not. Let's come over to the equity page. Okay, the volatility index is heading back up to its high levels up here in the mid 30s, right? So like the shockwave in the equity market, and this is where a lot of these massive big trends come from, the equities, right? The shockwave here, it's not driven from the Fed, right? Which has been the catalyst for equities coming off. This is about earnings and big companies in the US missing their targets dramatically, right? Which tells you growth doesn't look good. This looks like we've got a situation of potentially low growth, high inflation, interest rates have to go up. This is a bit of a scare shockwave through the equity markets. And you should see this go through the Australasian equities, Asian equities, and European equities, right? This is the US market is the epicenter for the global markets. And that's the shockwave that has happened. Volatility at that point, as I was just explaining, well, come back over here. The volatility index going back topside quickly tells me they're concerned. And we're seeing Swiss and yen, the safe havens here, rally, right? As an overall move, you've got to be onto that, because that will discombobulate the risk on, risk off profile generated from the equities that goes into the currencies, right? Keep an eye on the commodities as well. I still think the commodity indexes should do okay if the Chinese COVID relief thing pans out. If that goes pear-shaped, well, commodities will get hammered as well. And that will also create extra volatility in the market. The volatility index will go up as well. So there's plenty of things happening. And you know what, just on the sort of, as I sort of call it, the vanilla aspect of the market, where we're sort of focusing on Canadian inflation numbers and UK inflation numbers, right, being real keys to the next move. The UK inflation numbers, weaker, sterling drops, easy, right? But it is more complicated that, because you've got liquidity conditions varying, and that's something to keep an eye on there as well. So lots of things going around. Now, when I look at the markets like today, I'm like, well, that's interesting. Yeah, okay. So markets reacting. And this is coming back to a more historical market where markets do go up and down 3 or 4% on equities and this sort of stuff. Today, we've got the Australian employment numbers. Now, an election due this weekend. Yep, let's not worry about that. That's not a big thing for the, won't change much regardless of who gets in. Everyone's got the same policy these days. But what I'm looking for is weaker numbers here, right? The Aussie dollar is already sort of edging lower, right? After following sterling down yesterday, that makes for an easy move to the downside. So it's got to be on your radar at that point if you are in the Australasian market. Outside of that, you come back and you're having a look at where the raw nerve is going to be, as far as numbers go. Maybe it's the initial jobless claims numbers in the US, maybe not. I tell you that the equity market is the raw nerve at the moment, so make sure you keep an eye on that. Philly Fed Business Index, okay, a well-respected number, right? We get some weird things happening here, and we might see some more discombobulation in the market or a bigger move on the downside in the equities, in the equity world. So at the moment, there's plenty going on. You've got to be very selective with what you're trading. If the equities are moving down aggressively, like down, once it gets down past 2%, they'll start free falling, right? Do not try and pick bottoms or tops. Okay, bottoms if it's coming off hard. If they're rallying aggressively, don't try and pick the top. It's a surefire way to dig a hole in your account. If you see discombobulation, like as we've been seeing over the last 10 years, a risk-on profile where the equity markets get hit, Euro, Sterling, Aussie, Kiwi should come off. If they don't, okay, it's discombobulation, right? Then you're looking at the Volatility Index, safe havens, if they're in play. You're trying to isolate the trading opportunity. And this is where I've been sort of looking very closely at the performance of equities, North American equity market with the cryptos. It's pretty close to being spot on as far as if equities get crushed, the cryptos get crushed. If equities rally, the cryptos rally. So piece those things together, because the idea about trading is it's about finding the easiest trade, not the hardest one, right? So that's all I can sort of give you today. Lots of activity. Don't be afraid of these red numbers, right? Red is fear, right? It's easy to isolate what's going on, easy to isolate the direction and where you should get in. So these are good market conditions. Right? We've had a bit of a recharge, a bit of a reboot of a lot of the recent US dollar uptrends, bit of a relief, reloading. If anything, to me, they're ready to go again. But the key to that is we don't have any blockbuster US numbers to give it that big push, right? So the move will come potentially from a different currency, right? Whether it's Euro or Sterling, there's still plenty to play for. Friday. UK retail sales on the back of the CPI numbers and the IFO numbers out of Germany and Europe. Good numbers, good directional numbers for those specific currencies, right? Plenty to look at. All right, guys, that's it from me. I tell you, this is getting more interesting. Don't forget, the month is a cycle. You don't just rush in every day. It takes a day or two for trading opportunities to build, the pressure to build, and then it moves. Right? They're not going to happen every day unless we get some really shockwave news through the market, and you've got to be on your toes, right? This is where having a news service that can report stuff is important, because and you need to know why the equities got belted, right? This is all about keeping up with the fundamentals, where what's controlling the raw nerve, which is the US equity market. Connect the dots, look for the easiest trade. If you don't see it, don't trade. It's as easy as that. I know it's a bit harder, easier said than done. All right, guys, that's it. Just there on that last note, oil falls 2.5% as US refiners ramp up output. It's about bloody time, isn't it? So I tell you what, it's a $7 move. It's gone more than 2.5%. All right, guys, have a good one. All the best. Remember, it's all about capital management. You get that right, makes the trade selection process a bit easier. Good luck, everyone. Cheerio.